When investment titan Ron Barron issues a warning, it's a clarion call to every Tesla investor. Discover the crucial insights Ron Barron has revealed about Tesla's unpredictable trajectory. It's a bit of a wake-up call that resonates across the financial realm.
So I met him in 2010, and it took me 4 years before we began to invest. In 2014 to 2016 is when we bought the stock. We made about 20 times on our investment there. And then in SpaceX, we've been investing in that since 2017. And we're one of the largest investors in SpaceX.
It's not a publicly traded company,
no,
but what about your valuation?
We have about $1.7 billion invested right now.
Wow.
It cost us $700 million. $400 million of that is me on Tesla.
The reality is Tesla owns 50% of the U.S. market. They're selling more EVs than everybody else combined, and they're clearly number one globally. Tesla Model Y, largest selling car in the world, electric or gas.
Tesla bull Ron Barron has just given a grave warning on Tesla's unpredictable future. There is a lot brewing in the world of Tesla and electric cars, and these have left some investors confused about what really lies ahead. However, Barron's optimistic view of Tesla centers around the automaker's relentless focus on driving down costs, as well as its rapid growth in deliveries, the technology and software Tesla is planning to license to competitors, as well as its fast-growing battery business. The investment expert even believes that Tesla would actually eventually be able to produce up to 20 million cars per year, up from less than 2 million per year today. Ron Barron also expects Tesla's battery business to grow up to 30 times its current size. But what is the possibility of this happening? Let's find out.
Some investors have been frustrated with these Tesla price cuts. They're trying to grab market share, but some investors like Gary Black are like, hey, you're probably leaving $1 billion in revenue on the table.
Well, I think it speaks to their position of strength and the fact that they've been at this for 15 years and just what a lead that is compared to, all the startups that are trying to, make money from EVs. And of course, the big three and dealing with their strike and how that's going to increase their costs. So I think, Tesla, forest for the trees here is that this is the EV gorilla that makes money and will make money for a long time. And so we can fret and the bears can, say that the gross margins are going down or something. But think about this stock. This has taken so much bad news this year. There have been supposed delivery misses. Gross margins have been lower than they have been for a long time. And the bad economy hanging over everybody and the rise in rates. And yet this stock is up 107% for the year.
Ron Barron is a billionaire investor and the CEO of Barron Capital, and is one of Tesla's longest standing and most consistent bulls. Even after Tesla aggressively cut prices this year and saw its profit margin narrow substantially, the famed investor's bullish sentiment was unfazed, and in fact, he expects Tesla's shares to rise to a price that's multiples higher than what it's currently trading at. But could he be right? Where is Tesla really headed? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Tesla has been ruling the EV world for ages now, but competition is heating up. Not just luxury EVs, but also mainstream models of all shapes and sizes as well. A data firm recently found that while Tesla's market share of newly registered EVs in the US stood at 65% through the third quarter of 2022, it was down from 71% in the previous year and 79% in 2020. Even S&P also forecasts Tesla's EV market share will decline to less than 20% by 2025, with the number of EV models expected to grow in the coming years. The firm also stated that the report had shown that the growth of consumer choice and consumer interest in EVs had allowed Tesla to retain a dominant market share that will be challenged going forward. So why has Ron Barron remained bullish despite all of this? Let's find out. But before we do, if you like this type of content, hit the like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla's position is changing as new and more affordable options are hitting the market, offering a similar technology and production build as Tesla. However, despite this, the car company leads all others by a significant margin. The automaker sold slightly over 936,000 units in 2021, which gave it a market share of nearly 14%. Tesla is poised to lead the EV race not only in this year, but also in the coming ones too, even though there are concerns about its car demand. For instance, Morgan Stanley analyst Adam Jonas once predicted that 2023 was shaping up to be a reset year for the EV market, where the last 2 years of demand exceeding supply will be substantially inverted to supply exceeding demand. However, the interesting thing here is that this shift will largely benefit Tesla. But you may ask, why the sudden EV craze? Well, electric cars are more energy efficient, converting a whopping 77% of electrical energy into wheel power. Gas cars only manage about 12 to 13%. Likewise, EVs are environmentally friendly. A significant draw of electric vehicles is their ability to limit their effect on the environment while driving. If the electric and power consumed by these vehicles is produced by nuclear, hydro, solar, or a wind source, then the vehicle emits no pollutants, which is often the opposite for fossil fuel-powered electricity sources. Also, when compared to gas-powered cars, EVs tend to have more limited range. Most EVs can travel at least 100 miles on a single charge, while some can travel over 200 to 300 miles. Overall, though, it's usually a bit more limited than with gas-powered cars. Several factors have also promoted the sale and demand for EVs, especially governments who have offered incentives for EV buyers. These include, among others, tax credits and lower interest rates on EV loans. Many investors often overlook the potential of Tesla gaining massively from the growing EV market, but instead are focused on the impact of raising competition and price cuts, just as they were during those times of the Twitter fiasco. When Adam Jones spoke about Tesla's potential for 2023, he noted that the coming months will be especially challenging for EVs, echoing much of what the industry has been saying and has seen throughout 2022. He also added that the battery supply chain crisis at the moment dominated boardroom strategy sessions. And between a worsening macro backdrop, record high unaffordability, and increasing competition, there are huge hurdles for Tesla to overcome. But the thing is, despite his comment, Adam Jones also admitted that he believes, in the face of all the pressure, that Tesla will widen its lead in the EV race, especially as it leverages its cost and scales advantages to further itself from the competition. From longtime Tesla bull, Cathie Wood believes that Tesla is on a path for enormous success, and that this will see significant impacts on the company's stock price. According to Wood, there are several factors that could make Tesla go up in the future, like the automaker's expansion plan in areas like robotics, AI, and energy. Tesla is the only company in the world with a fully working AI-based general driving solution. The automaker's got a goal of making its cars fully autonomous and is leveraging big data and AI to make that happen. With its FSD software gradually reaching its peak stage, it is anticipated that in a few years, Tesla cars will be fully autonomous. Likewise, Tesla's solar business is also a big driver for the company's growth. In 2021, the company reported $801 million in revenue from energy generation and storage businesses, which include its main products for solar, its Powerwall storage device, and Megapack. While Tesla has not been fully focusing on solar, there are still opportunities to fully optimize the business in the future. Experts like Ron Barron predict that if Tesla is able to give more attention to its solar business, then that could be a driver for the company's growth into a multi-trillion-dollar company in the next 5 to 10 years. What do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.